All right. Good morning, everybody. A little bit of a relief bounce after late afternoon falling out of bed. I looked around, I didn't see anything that was really the cause, but if you read Spot Gamma, the founder's notes last night, they do talk about some flow coming in right before that drop. So it's kind of interesting on that point. We've got Waller speaking today. It's not really too big of a deal on that one. And then the BOJ tonight has data coming out that you really want to kind of pay attention to. They're still in a bind, and the Bank of Japan is still one of the biggest bricks in the wall of worry, just from the sheer amount of unknown that's going to come from, a change in policy that's been coming for decades. And I don't know, a lot of scholars are arguing about what happens next, and markets don't like the unknown. So Bank of Japan still #1 brick. UK down the most at 0.25%. Hong Kong right behind that, basically flat. Start getting into the US markets with the S&P up 0.5%. The Dow right beside that. NASDAQ only slightly better, and small caps leading the way for the US, closer to 0.75% than any of the others. Japan doing the best at more than 1.5%. And if you go look at the Nikkei, I mean, my goodness, what an amazing chart. So, it kind of goes back to focus on markets that are making moves rather than trying to trade one market all the time. Unless you like sitting out, right? It doesn't bother me to sit out, so I don't care. I'll wait for a setup. But if you're itching to get a trade, find something else to trade. So I mentioned it. I already said it. Waller is going to speak today. It's the only thing on Market Watch. Now, in the morning briefings, this entire show is about teaching you ways to prepare for the trading day, right? Sure, I give you a fish while we're at it, but I'm really trying to teach you to fish, to feed yourself. There's a reason that I look at 4 different websites when we're looking for economic events. Each one of these websites has an agenda. Market Watch really doesn't want a lot of clutter. They're not trying to show you every single thing that can come out today. They're only going to highlight the biggest, and they're only going to focus on the US. So it's nice from, a big overview, kind of what's the biggest thing on the table, but they're not your go-to if you're trying to see everything that could come out on the economic day. It's free. I'm not logged in. You don't need an account to go here. It's Market Watch. Market Watch is connected with the Wall Street Journal and Barron's and all of that. So, just kind of keep that in mind. But you don't need an account to see what I'm looking at right here. Same thing with this one, investing.com. This is a global perspective. You can look at bonds, commodities, stocks, indexes around the world, get an idea of what's going on. It's free. It doesn't cost you anything. Investing.com, by the way, has a pretty amazing phone app. So does FX Street. Now, with these guys, unless you are going to get an account, which I mean, I have one, a paid account, then you don't want to sign up for their free account. They will bombard you with emails, nearly harassment in their approach. But if you have a paid account, then no, they don't really bother you all that much with the emails. I've had an account with these guys all of 2024. Normally, I don't get an account with them, but I gotta say I'm impressed. I think it's worth the money. That says a lot considering all the different apps and applications that I have access to, that I'm actually out of my own pocket paying for a subscription here. And I think it's worth it, but you don't need a subscription. You can come to this and look at the calendar. FX Street has this impact gauge, which is really useful if you're new, to kind of give you an idea of which one of these economic events might have an impact on the trading day. Now, some that they suggest won't have an impact or likely won't, doesn't mean that it couldn't. So always keep that in mind. For an example, we have auctions that come in all the time. We got a 7-year today at 1 o'clock. They never show these auctions as a possible event. But to me, these auctions, I've seen them be highly impactful, and I always pay attention to when these auctions come in. So don't trust the gauge. The gauge is more of a historical reference. What they do is they look back at all the other times that we've had, say, retail sales out of Australia, and they look at how many times there was volatility from that, and then they measure it with this 3-point gauge, either really light, kind of medium, or dark. So it gives you some historical context, but don't think if it's really heavy that we're going to get a move, or that if it's really light that we won't get a move. They're just giving you some reference there. FX Street also does a really good job of doing a global outlook. So you kind of get an idea of looking ahead, especially as swing traders, what might be on the table coming up. Like tonight, we're going to get data out of Japan. It's kind of a big deal. I know it doesn't show it as a big deal, but there's some potential. So just keep your eye on it. This is FX Street calendar. And again, you don't need an account here. You can just come over for free and check it out. The last one is Finance Juice. Now this one also you can get a free account for, and I really highly encourage you to do that. This is a news aggregate website. They're going to aggregate news from all over the place. And just to save you from wasting your time, you want to turn off all the junk news that will clutter this thing up. And if you have an account here, even a free account, then you can do that, and it'll remember your settings, so you don't have to keep going in there and doing it every day. You want to filter out things like Fox News, CNN, MSNBC. I don't know about you, but I don't want to see that trash. So I turn it off and I don't see that stuff. This is a really good site throughout the trading day, not just for your morning. It does have the events on the side. They do a really good job of catching short dated speakers. So usually these speakers are scheduled to speak so far in advance that it hits all the sites, but that's not always true. And sometimes we get like a short notice speaker. They tend to show up on Finance Juice better than on the other sites. Also, while they're speaking, if they say anything that is deemed market relevant, they'll post it in here. So this is a really good site to keep your eye on throughout the day. They also do these market wraps. Like they give us one for Europe, even though Europe's not going to close until 11:30. They know we're getting up and getting around, so they do an early one for Europe, but they do one for the US, Asia, Europe, and they also do a pre-market one. So if I was to hang out here at some point, we would see a morning briefing pop up, kind of giving you an idea of things that could be on the table for today. Really useful site, and it has tick stream built into it. If you're trading the futures, this is the free version. It will make noise when the flow picks up on the ES, and it doesn't cost you anything because it's the free version. It's also not complicated. There's no charts, dials, graphs. There's nothing that you have to do except turn the slider up and increase the volume, right? That's it. It's free. Now, obviously, if you use the paid one, it'd work better, but it doesn't cost you anything. When I get to reading, I kind of tune out a lot of other noise. But there's times where I'm busy and I just turn this thing up, and then I'll do my reading or talking or doing whatever I'm doing, and the noise will catch my attention. It's not perfect, but it's certainly saved me from missing opportunities like yesterday's double bottom. I caught it because this thing was making noise and got my attention and brought me back to the charts. So it's worth looking at, and it's free. None of this costs you anything. This will give you kind of a heads up for the day. So yeah, I go to all 4 sites. Every one of those, there's a reason. And by the way, these are still not all of the events that are going to happen today. Throughout any particular trading day, there's nothing less than 20 to 50 different events. A lot of them you don't even hear about. We didn't look at anything on the agricultural side, right? We're talking things that doesn't even seem relevant, like the amount of grain that showed up on a barge in New York Harbor. That's another one of the economic events that comes in every day. So don't think that you know all of the events. Just remember that the government is lazy, and whether or not you know which events are coming out at what time, you know that they like to land on a half hour and they like to land on a new hour. So watch the clock. It's so cheap. You got one at the bottom of your screen. Watch the clock. Every half hour, there's an economic event. Whether you know what the event is or not, there's an economic event somewhere in the world every half hour, every new hour. And you can just anticipate that there's going to be a little bit of flow that comes in. You're not going to want to use a tight stop. You're not going to want to try to scalp with a tight stop right at a new half hour or right at a new hour. And you'll get better at it once you start paying attention to the clock. Volumes are really light again this week. We've been talking about it all week, 70, 60, 61. These are really light values that are not connected with hedging. We're not seeing any hedging activity in here so far. So they're just really kind of sitting out. We're still in a hurry up and wait mode with PCE and POW on Friday. The Fed speaker today, sure, he could, shake things up a little bit, but he's not a policy maker, right? So he's not setting policy. He's not, in charge of making decisions about policy. Sure, he's a voting member, but that just means that his voice is heard. So are all the others. So sure, he can say some things today, but I doubt it would be anything enough to change the course or the direction of the market at this point. We're all still laser focused on POW and PCE on Friday. Even this drop down yesterday, look at where we're at now. We are right back where we were yesterday. So that drop down was nothing. When I say hurry up and wait or a sideways week, it implies that we want to buy at the lows and sell at the highs. I say that we sell into strength and we buy into weakness. There's another phrase for that. Sell the rips, buy the dips. All right. That still holds true even right now. So nothing's changed, even with that sell-off yesterday, because we were right back where we were. We did reach the weekly pivot point, however, which is nice. It's a little bit of a reset. And we just got the AM founders note. Yay. So I'll be able to get that shared. If they could just get that out there a little bit sooner, that'd be nice. So I'll get that put into chat. So we're back up against the previous week's close. Remember, open, high, low, close are pivot points. Even a weekly close that we've already passed through multiple times still has significance to it. We're going to want to know where it is. We're going to want to know when we hit it. We're going to want to see how price responds around it. And keep in mind that liquidity resides on the other side of the pivot. I know I say that a lot. It just means that if you're looking at a line in the sand, like yesterday's low, yesterday's high, previous week's close, you don't expect price to drop right to that spot and hit it and bounce off of it like a ball on cement, right? We expect to break that level, go through it to the other side, because that's where liquidity would be. Same thing across the top. So when you see pivot points, wherever those pivot points came from, don't expect price to go to the pivot point and bounce off of it, because that's not what it's supposed to do. Sure, you can find examples where it has. And when I was new, I used to hunt those examples down as a part of an argument or trying to convince myself that that it does happen. and that we should try to trade it that way. But I was new. And the more work that I did, the more proof that I had that that's not what price is supposed to do. All right. So sure, you can find examples where that happens, but that's the exception, not the rule. So with that in mind, we're still in hurry up and wait mode. We're still in chop mode. We're also a little bit of a megaphone pattern, but really we're not getting the top side. Generally speaking, a megaphone is supposed to slowly widen out a little bit at a time. And instead, we're just really pushing more and more and more to the downside, but we're really not opening up on the upper end, which is fine. You know, it's like we're just continuing to break down that lower end, but we need a good pullback anyways, right? If we think about last week, just kind of wing it here a little bit. The half back is at 44. It's right about where that green voodoo line is. I think that one's called Forest. So we can get rid of the drawing since we can see it's right lined up with Forest. That'd be the half back. It's also really close to the 3-week moving average, just below the 10-day moving average. We've got a lot of structure down there. And for today, it's at the lower ADR. So coming into that 52.44 would be the perfect pullback amount. Not too much, not too little. And for the NASDAQ on the hourly and kind of in the higher time frames, we're getting right into a structural level, 50% on a fib or on a quant levels, and part of a rising channel low. So confluence, right? Multiple reasons to expect a rebound off of that level, but we got to get there first. And with hurry up and wait mode, they're really just trying to keep the market from expanding too fast, dropping out too fast. There's a lot of decisions to be made. And keep in mind, a lot of CTAs and volatility control funds, what we call non-discretionary trading apparatus, they're going to be rotating. We're almost at the end of the month. So we should see some flows from that too. Those flows can get a little tricky because if they're just extending a position, then there's not going to be, it's not a new bias, it's a continuing bias. If they do begin to rotate, then we need to do a little work for fractal rotation versus, you know, a hedge fund rotation, sector rotation. You know, what kind of rotation are we getting? They did roll the call wall up, by the way. I believe it was, yeah, there it is, 54.59. So that's aggressive when we have the call wall rolled up. Now, Spot Gamma did mention in their founders notes last night that they would not be surprised if the call wall gets rolled back down because of that drop that we had at the end of the day. However, you can see that we already ran back up. And since the founders note this morning came out while I was already streaming, I don't know what they have to say about that. They might retract that statement and say maybe they don't expect the call wall to be rolled back down now since the market has already recovered from the drop that we had last night. At this point, you guys have had a chance to read it. I haven't. But that call wall getting rolled up, that's a bullish behavior. Now, don't get me wrong, they can unwind that very easy. You know, we've seen it before where one day the put and call wall get shuffled, and then the next day they get completely shuffled again. And it just takes away all of that bias that we had assumed the day before. We can see the put wall is still down at 46.60, just kind of round it. That's not necessarily bullish. We would want to see in tandem the call wall get rolled up and then also the put wall get rolled up, especially from this distance. So this kind of takes some of the bullishness out of the call wall roll that we did get. We're a long ways from the volatility trigger, and these options levels, at various times, some of these options levels are more valuable than at other times. I know they probably wouldn't like saying that, but sometimes macro is more important, right? Sometimes volatility or the options levels are more important. Nothing is always important, right? There's just times where that's not true. We don't have an MDP, missed daily pivot, but it is interesting that we're starting to widen out on my bands that I have here. Is something that I've been referencing a little bit more lately. I recently started putting these bands on and just kind of keeping track of them. They are self-adjusting. Oh, wow. All right. Thank you for that. Someone just shared some data on EV. I'll get around to reading that after. Was doing a deep dive into electric vehicles, expecting some cannibalism, right? We're expecting some of these companies to just get taken out, absorbed. And I don't know, we'll dig into it later. There's some data that is a little eye-popping in that space. So we still have this shallow spot, 10-day, 30-minute. We can see the shallow area here and the low that we had talked about yesterday, and the discussion that if we broke that, we very likely would just fall all the way through and get to the point of control. That didn't happen. We flipped over and went back up, but there's no pivot here. What did we hit, right? Other than a measured move, which is just spot on perfect. Other than that, what did we hit? Nothing. It's because some other market hit something and it turned, which turned the S&P. And in fact, a couple people asked me yesterday, what the heck was this move? What was that? I didn't see anything come through. But other than the fact that it was power hour, right? At 3 o'clock, what happens? Bonds close, treasuries close. That's not a coincidence, right? If the dollar is the reason that we were holding up and suddenly the dollar closes, we lose that structure. Generally, that's something I focus on if we were down a lot, and we weren't down a lot when that move happened. So when we get into power hour, it's usually the first question I ask, where are we at? And then the second question, how did we get here? Was it because of treasuries? Did the 10-year do this to us? Did the dollar do it to us? Because if the dollar and the 10-year are the reason that we're at the highs or at the lows, and then it's 3 o'clock and those markets close and we've got 1 hour left, we can drop from the highs or pop from the lows. Only this time, we dropped through the lows that we already had and fell even lower. Just watch the clock. So don't know why we fell through, but also don't have a pivot point to focus on to say, well, we hit whatever. Yeah, what did we hit? I say we didn't hit anything. Some other market hit something. And a market inverse of us or a market correlated with us, it doesn't really matter. The measured move told us where it was going to stop anyways. So doesn't mean after it stopped that it couldn't continue to go lower, but at least the measured move gave us our first pause location. And that happened to do it perfectly. There was 2 really beautiful moves yesterday that were textbook on the lower end before that dump. All right, so we had a VPOC. Yesterday, I said we were going to leave it on until the end of the day, just in case we went back up to that location, which we didn't. So we can take that one off, but we have this new spot anyways. So we're going to lay it here. And yes, we've already hit it this morning, but with us challenging this upside move anyways, I want to go ahead and put it on there. It has been hit, so it's no longer a V POC. It's just a POC at this point. So I'm going to change it up just a little bit so that it doesn't get lumped in there with the POCs. If you were to study a volume profile book, they'll tell you carry forward the value area high, which is this upper line, the value area low, which is this lower line, and the point of control. Generally, I don't do that. I just carry forward a point of control as long as price hasn't hit it yet. We can see price hit that point of control, so it's no longer a VPOC, but it is an area of interest today that I want to keep on my radar, so I'm going to carry it forward just as a point of control. These others, these VPOCs that we typically use, are there for a reason, right? Same reason. Just carry them forward as needed. What's up with this one? I bet I grabbed that darn thing and moved it once. Can't really lock in Thinkorswim's lines like you can on TradingView, which sucks. I've accidentally deleted my lines on Thinkorswim so many times. The good thing is you can make copies. So, I mean, it's not perfect, but better than nothing. So keep your eye on 88. If we were to make another attempt to run up, it's going to be a level of concern to get through that wall of traders. And remember what a point of control is, right? It's the location where the greatest amount of volume happened in whatever time frame you're measuring. And for us, it's yesterday. So it's not support, it's not resistance, it's nothing more than the area where the greatest amount of volume happened. And you want to take that into account when we go back up there. Look at it from your own point of view. If you got in yesterday at 88 and you find that we're back there this morning, how would you feel about it? Well, probably the same way that they feel about it. Long or short, right? So we expect to see trading activity at that spot. And hey, wow, look at that. Trading at that spot. And it turned into a resistance, not because it was resistance anticipated, but because of the activity that showed up when price got there. We're still above the 10-day, barely, but barely counts. Hand grenades and horseshoes. Still got the pattern. Still looking for a solid close below the 10 to get a new reset like we had back in mid-March or early March. Otherwise, we haven't had one of those since around February. Keep in mind that this week is the last trading week of March, right? I mentioned it a little bit ago with the VC funds and the CTAs, but there's always more than that, right? And it doesn't hurt to get some outflow numbers, ETF outflows or inflows, if there happen to have been some inflows, kind of get an idea of the aggression of the traders out there. You can sometimes get these numbers for free if you just Google them. Your data might be a few days late, but who cares if it's free, right? You're just trying to get a feel for the ETF inflows and outflows. It's not like you're using it for a trading decision. Just gives you a little bit of insight on where the money's going. Still maintaining our weekly expected move. It's not a surprise. It's a sideways week. This is exactly what we expect, right? It's also a short week. And that's something to consider because we didn't really talk about that. Let's remeasure last week's. All right. Obviously, I didn't get it to the tick. It's not perfect. We don't need it to be perfect. We want to measure last week's range and set it on this week's range like we did on Monday and compare how much movement is expected this week versus last week. It looks like the range is a little smaller. And on Monday, we talked about the fact that that implies there's a lower volatility. Not necessarily, though. The week that we had last week was a full week. It had 5 days, And how far can you travel in 5 days? Farther than you can travel in 4 days. So that makes sense. The range should be smaller just because this week has 4 days instead of 5. Once we take that into consideration, the amount of volatility that we have this week is not less than what we had last week. It's at least the same, if not more. So, the whole idea of PCE being a volatility suppressor because we're all waiting on it, and then, of course, causing volatility on the day that we get that data, our next grid, our next box, should show the effects of this volatility that gets created from PCE. But the week of PCE is volatility suppressing, just like the week of FOMC is volatility suppressing. All right, so we're still around 3.5% above the 10-week. We can see we're still we're just maintaining the status quo at this point. Bring the line down a little bit. Around that 3.45, we can look back and see that there's been plenty of times where we've been higher than this point. Yep. Yeah, there's a lot of volatility suppression going on. And yet, if we look at the average daily range, we're still running at about 0.93%. That's the average daily range. That's the same as it's been for a long while. My argument about volatility being gone or not, I still say volatility is alive and well, and it's been alive and well since COVID, and it still hasn't gone away. And the easiest way to demonstrate that is these boxes right here. The size of this box right now in this so-called low volatility environment that we're in, you take that box to a week that we had before COVID, and you will find that it's almost 2 to 2.5 times bigger now than the range was pre-COVID. Why? If volatility is so low, then why is the ranges still so big? Well, these ranges are derived from volatility. They're literally created because of volatility. And the argument is at that point that volatility hasn't gone away yet. So there's COVID, and we'll just take it anywhere before COVID. Here's the box. So here was 1 week, first week of December, where it was really big, or this week. So 2 weeks, kind of like right around Black Friday and Thanksgiving and all of that. Otherwise, those were event weeks. Look at the size of these weeks. They don't compare. And especially once we started getting into the last weeks, right before the end of the year, these are gigantic. Or the box is huge compared to these. So I still say there's a lot of volatility priced into the market, or at least priced into the options. Those options prices are just out of control. But it's what we have, right? So we trade what we got. So I know it's a boring week. There are things that are worth trading right now. If you find the moves on the S&P too stagnant, the range is too tight, swap over to a different market. The opportunities from yesterday that I'm going to point out, because these are really good range day tactics. Double bottoms and double tops. They make for a really nice trading day. Let's set it to the tick structure that I generally use, 3,500. Let's do a 5. You guys are probably more comfortable with a 5. All right, so double bottom is supposed to go lower than the previous low, right? So right there for an example. Now, when price breaks out on a double bottom or a double top, at what point is it supposed to stop, turn around, and go the other direction? How low would this have to go before we consider the fact that it's not a double bottom and that maybe we actually are truly breaking down and going to go lower? I like to use the 111. So if you just take your quadrant lines and add a 111 to it, that's a really good reversal. A good breakout or a good breakdown should get to the 1, 2, 3, 6, and then give you the opposite candle color, at which point we could choose to, move the fibs, start using a dynamic fib placement. But either way, you'd want to get into that 1, 2, 3, 6. And we didn't. We perfectly tagged the 111, flipped and ran back up. That's what it's supposed to do. Really nice double bottom. And I'm on a 5-minute, but if you trade like on a 2, then that looked a little cleaner. Or if you trade on tick charts like I do, that was way cleaner. So a nice little double bottom. Take it across the other direction. We had that double top yesterday. Just using the morning session stuff, right? You had your low of the day, you had your high of the day. Let's back it up to where it makes sense. There's your low of the day at that point. It actually got adjusted. There's your low of the day. There's your high. A breakout that fails. Another breakout that fails. Both of those hit that 1, 2, 3, 6. It didn't stick. Came right back down and closed without ever getting a candle close on a breakout. So that does set us up for this one. Just flip the lines around. There was the low of the day. There was the high of the day. And again, double bottom breakout. Cut right through all of this and came right back up again. And if you had continued to use this low, which is what I was using all day, look at that. Spot on, perfect. Those were the two really nice reversals. I didn't trade these reversals off the highs, but I caught that reversal off the low, especially this one. Double bottoms and double tops. So always keep in mind with a double bottom, it's not supposed to be an equal bottom, right? That's a cup. That's an inverse cup. We would expect it to go lower. We want it to go lower than the previous low so that it can trap all the bears that are going to try to run it to the downside. Trap them, squeeze them, pop their heads off. Their buying to close adds to the buying that turned all of this around in the first place, and you get this nice explosive move back up. Same thing with double tops, right? Double tops, bull trap. So we're not expecting breakouts. Now, in the later part of the day where, at 3 o'clock yesterday when everything started to break down, once you get into power hour, that whole hold the range, buy into weakness and sell into strength, all of that gets put on hold. You always have to be careful of a move in power hour. So it's one of the reasons that you don't want to use range day tactics in power hour. For today, we still got the ADR low and the ADR high. Neither one has been hit. We're closer to the higher end than we are the lower end, but we're still not expecting to really get to either one. We could, by all means, with Waller speaking today, it's absolutely possible, but we're still in hurry up and wait mode for PCE. All right, so this is Bitcoin. It's a little sleepy this morning, kind of stagnant and not moving. It is forming a little bit of a wedge, and it's above the halfback. So we're not necessarily expecting Bitcoin to fall back out again. The fact that it's maintaining above this halfback kind of implies, especially in a falling wedge like this, that we break up. That magnet really throws my drawings off, but whatever, you get the idea. We're going to expect this to break out and continue to maintain above this 50% mark. We could Busby come back down and tag off of it around that 67. And if you're looking at this thinking, who the heck cares about Bitcoin? I'm not really pushing for Bitcoin. Just if you're thinking about equities today, think about, oh, I don't know, Riot, Mara, Hut, Hive, Coin, all of those proxies to Bitcoin that you would get to play for, some day trades. If the indexes like SPY and the Qs are sideways, 80% of the market's going to be sideways. You're not going to get a lot of really good plays. So we got to go to whatever's making moves today for the equity traders, because you're just not going to get anything if most of the market is doing what SPY is doing and SPY is not doing anything. So we do have Nat Gas down, the VIX down, China ADRs, and that's it. So Baba, Baidu, JD, PDD, we'd expect those down, and probably a lot of the EVs, NEO, XPEV, those sort of things. On the side that's up, we've got the Mag 7, semiconductors, Bitcoin, gold, gold miners, biotech, healthcare. That's not a bad group, right? We don't really have some finance. So it's a little bit, it's not quite there yet. I'd want more finance. But having semiconductors in there and having the Mag 7 in there, those two really important if we're going to see an S&P NASDAQ recovery after that drop yesterday. And then to just hold the line. So since we expanded to the downside yesterday, kind of testing the low, testing the range, and expanding a little bit, it would make perfect sense for us to do the same thing in the other direction, to the upside now. Remember, the high is already set from last week, this 53.22. If we're just maintaining the range while we're waiting on data, chopping about and really not going anywhere, then it wouldn't surprise if we get one of these legs, only instead of to the downside, it would be to the upside, trying to maintain this equilibrium. Right now, that's the zone. And then, of course, the bigger zone takes us back up here to that yellow line. With the Mag 7 up and semiconductors up, we could easily test the upper edge here, maybe even get a breakout above the pivot point because, liquidity resides on the other side of the pivot. That could get us back into like 5,300, 53.6, 53.10, then back down again, right? So it's a good start to the list. If you're equity trading, looking at stocks and such, you're going to want to focus on the Mag 7 and semiconductors at this point. Unless you're interested in shorting the China ADRs, they're already pretty much beat down. So I'm not too interested in that. But we could see Bitcoin is up. So we're going to expect things like Riot, Mara, Hut, Hive, Coin. We're going to expect those to also be up. Now, the other day we had Bitcoin up and the proxies didn't make the move. So it's not a guarantee. Generally, if you get Bitcoin moving, you'll get the proxies moving. That's also a little bit of a tell, by the way. The move that we got in Bitcoin it didn't have the proxies with it, and it didn't stick. It unwound in Bitcoin. So behind that, we do got uranium, precious metals like gold and stuff. If you keep track of FX Street, they've been doing a lot of talk about Japan and what's going on with the US dollar index, the Dixie, and the moves in gold. And I think just about every gold bug out there says that gold's not done yet. So something to kind of keep in mind too. Gold, gold miners, silver, kind of put them all together. And then we got semiconductors. So MU, Intel, NVIDIA, obviously, SMCI. There's also a new semi ETF that came out. It was getting a lot of flows yesterday. ATLB. Was it that one? I think so. Yeah, it's a semiconductor IPO, not an ETF. And they are getting into AI as well. It's new-ish, all things considered. And healthcare, small stock, small caps, those are pretty much your leaders. Industrials have been doing really good too. It's worth taking a deeper look at those. So if we're looking at some kind of rotation, then it's a weird one, right? Because we've got the Mag 7 up, and then we also have a lot of these value spaces that are also up. Just a little bit weird. So this is growth versus value. It's on a daily chart. Usually in the pre-market, we'll see if it's up or down. Right now, it's nothing, so it's not getting any flows or any movement. But this is the Mag 7 kind of. It's like a homemade Mag 7 that works in the pre-market. We closed red yesterday, not a surprise, but we are gapped up some this morning. It just kind of reinforces the idea that some of the Magnificent Seven names are moving around this morning. All right, so here's the equities list, and it's just a small list, but it has the fangs in it. What's up the most? Coin. And right behind that, Mara. And then Tesla getting a little bit of a rebound. Broadcom was added to the FANG index a while back when they removed AMD and they added Broadcom. So the changes to the FANG index are frequent. You can always just check. It's not like they give any of us an announcement, right? But it doesn't cost you anything. Just come over and look and see who's in there. They knocked AMD off and added Broadcom, oh, I don't know, last quarter. So Microsoft not doing as well this morning as some of its peers, but also Apple not really all that hot. There was some news on Apple this morning too about a investors event. They're going to unveil a lot more of their AI work. I think it's in June, but I'll have more data later today. It's certainly not anything that's going to happen really fast. It's supposed to be out a ways. They want time to hype it up. So right now the highest moving things are Bitcoin proxies. That's where I would put my attention. But I don't have it in this list. Industrials are up this morning nicely. If we are looking at a capital rotation, then we want to maybe look away from the tech names, the Mag 7s, and look more at staples and at industrials. It's worth a try, especially with no expectation of the S&P and the NASDAQ really doing anything. We're going to expect to hold the line into Friday without any real big drama. You see, we already got back, right? We gap closed that thing, and we're back to hurry up and wait. Everybody be careful, be safe. I'll see you all tomorrow.